behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to BTT's special report. We're covering everything, wall-to-wall coverage all day today on the war in Iran. And we have the expert actually in the energy market. We have Maria Jelescu Dreyfus, who is joining me. She is the CEO of Ardinall Investment Management out of New York City and also a board member for ExxonMobil. Maria, welcome to the program. We have to obviously talk about oil. When we woke up this morning, we saw oil just spike higher. West Texas was up close to 10%. Things are retreating back now. How should we interpret this? Is the risk going away?
Hey Todd, it's great to be back with you and lots of questions there. I would say the risks are definitely not going away, but it's more the reaction of the market that was caught a little bit off guard over the weekend, and it was a little bit of, shoot first, ask questions later. And then we've seen this reversal over the course of the morning in terms of the price action, especially in crude. What's been really interesting is the natural gas, especially in Europe. So in LNG prices, European natural gas, those seem to be staying higher because obviously the disruption risk there is greater.
Okay, so let's talk about the disruption risk. Now you have, I mean, with Iran, they're saying they're not going to close the Strait of Hormuz, but it sounds like there's parts that have been shut down. And then my question is, why would the Iranians want to close the Strait of Hormuz? Their only economic engine is oil, correct?
Correct. So the question is, are you willing to take pain so that you can inflict more pain on your adversary? So the Strait of Hormuz is technically not closed, but there's a lot of apprehension around taking any ships through that, as you can imagine. I think the latest numbers, and it's very, very fluid, so no one really knows, real time, but we're looking at potentially, half of the production that you would normally, or half of the oil that you'd expect to go through the strait being halted right now. And I mean, just think about it, right? Like there's a lot of private shipping companies and very few shipmasters are willing to enter the Strait of Hormuz. They say the insurance market is, it's incredibly volatile. It's hard to get insurance, um, and people are worried. I think I've seen some reports of Chinese shippers willing to take the chance and enter the Gulf. I've seen some reports around some sovereign. Um, Shipping from the Gulf states, but I think a lot of the commercial enterprises, a lot of private enterprises are really concerned about taking that chance these days.
Is the fear that, I mean, if you have one of these tankers that's going in and they're picking up hundreds, thousands of barrels of oil, is the fear that
Try 1 or 2 million, right? Like the VLCCs are 2 million barrels a day. I mean,
2 million? That's amazing.
that's
So
$150 million of value on that chip.
so then the insurance, is it, I mean, is it pure, is it just one trip? I mean, how does that work?
I mean, I think you need to insure your cargo, and I think that the insurance companies are balking at the idea of insuring $150 million worth of goods through such a difficult, volatile period.
So is the fear that the US or Israel will actually take one of these tankers out?
No, I think the fear is that the Iranians would do something, and there's been a lot of history where there were mines placed in the Gulf in previous conflicts. So it's a very, very delicate situation. And I
That
mean,
is very delicate.
you don't know where the risk could come from, but it's very tense, and people would rather avoid it if possible. But again, it's not really feasible at the volumes that need to be shipped out of there. There's a plan B through another alternative way south of the Strait of Hormuz, but that's a fraction. That's less than 10% of what typically flows through the canal. So it's very, very concerning, but hopefully not too long-lived.
And that alternative, that's the Red Sea, I presume.
Uh, it's basically through there's another port. It's uh, right past the Strait of Hormuz. It's called Fujairah, and I think
Okay.
that the export capacity of that is, 1.5 or sub 2 million barrels a day versus 20 that go through the strait.
So, in your opinion, do you believe that the Iranians, if they are just against the wall and they have really zero opportunity for recovery, do you think that they'll sabotage their own oil fields and their oil production?
It's really hard to tell, Todd. I mean, it's hard to tell who's making the decisions right now. Um, Obviously, with the decapitation, the technical decapitation of the regime and the fall of the supreme leader, there's a lot of distribution of decisions and power, and you don't even know who is making what decisions at this moment. So it's obviously very fluid, and I don't think, me sitting here in New York can have an edge. But I do think that there's a lot of uncertainty, and hopefully it will be resolved somehow sooner than what we've heard as 4 weeks or a couple of weeks, because I think that the market can withstand a short-term disruption, but I think going into 4 weeks or even longer would be quite detrimental to trade flows and everything else happening, in terms of oil still being the blood of the economic engine in the world.
Yeah, it is. It definitely is the octane. That's for sure. So I woke up this morning. I had a ton of text messages from traders saying that they are hearing that if this is prolonged, like you said, 4 weeks, that oil could actually clip $100 a barrel. Do you see that actually happening? Is that realistic?
It is not unrealistic. It's, there's enough storage, a lot of, there's strategic petroleum reserves. Um, China has been building them, and actually a lot of the Iranian oil, a lot of the Iranian exports were floating to China. Um, the world is a little bit more, I would say, immune to a shock in oil volume disruptions. What I think is concerning is on the gas side, right? So Qatar, which is a quarter of the world's LNG exports, has now put their facilities under force majeure, and European gas prices are spiking like crazy because obviously, that puts tremendous amount of pressure on any LNG importer.
So why did the Iranians bomb that facility in Saudi Arabia?
I think that's probably one of the most surprising reactions, right? Because the attack on U.S. military bases would be, I mean, it was in the cards. The attack on Israel was also predicted, but what was not predicted was the attack on the other Gulf states in the region to the extent that we've seen over just the past 48 hours. So a lot of that could potentially be targets missed, right? But at the same time, there's been a lot of damage. And I mean, Ras Laffan, the LNG facility in Qatar, that is extremely concerning. And that is, frankly, the world's largest LNG exporter. And right now, it's technically under force majeure and not producing.
100% not producing? I mean, is it
We don't know. I mean,
okay?
there's probably some trailing production that could still be exported, but as of now, it's curtailed, at least significantly curtailed.
So the Karg Island outside of Iran is probably their number one oil asset. Obviously, it's their exporting and mechanism, I guess, or to come up with a better word. But the point is that what do you think? I mean, as far as somebody has to take control of that. It's not going to be a new government just yet. So, do you anticipate that we will have to have boots on the ground to actually maybe save those oil plants?
I mean, it's a great question, and I don't think we know the answer to that, Todd. What I think is really interesting is when you think about previous regime changes, very few of them happen through air alone, right? And obviously, the U.S. administration is emboldened by what's happened recently in Venezuela. But I think this is a much more difficult situation. So people assume that what we're doing right now is not going to be enough to really allow for the regime change that the Western forces would like to see. So to be determined, but it is a very important question.
Is there a price point where, or a disruption that could impact China to the point where they need to find oil elsewhere, or do you believe they have enough in reserves? And if that's the case, how long will those reserves last?
It's a good question, and we don't know the exact answer, but we have seen China uh, adding to their petroleum reserves through the second half of last year, and it's actually the reason why the demand numbers were surprising people to the upside, because the Chinese kept buying and putting the oil away at fairly low prices and stowing that away into their strategic petroleum reserves. So we you know the numbers are hard to really get a lot of confidence around, but the reality is the Chinese are prepared, and oil is fluid, right? You can buy from anywhere. It's just, it's a commodity. You buy at the price of the market. The question is, with these developments, how sustained of a spike and how big of a spike are you going to see? And the way that the markets opened this morning, they were pricing in a much more prolonged uh, um, conflict. But I feel like the recent retrenchment would suggest that there's increasing optimism that the situation would be resolved more quickly.
Yeah, I think there's a lot of hope with that too. So, with the 4 million plus barrels a day, if that is, say, that halts and stops, do you anticipate OPEC increasing their supplies? Because I would imagine they're enjoying the royalties that they're receiving from the higher crude prices.
Yes, I mean, so there's obviously a big bear argument weighing on the oil market, and that is the fact that there's a lot of spare capacity in
Right.
OPEC, and that you could see, primarily Saudi Arabia, but some of the other Arab countries to bring in additional capacity with relative ease. So that's obviously part of the consideration in terms of the oil, not seeing oil spike to significantly, well into the triple digits, the way that we've seen it in 2022 when Russia attacked Ukraine.
So, and you just recently came back from a trip. So, in the event that the 4+ million does go away, can you tell the audience a little bit about where you were? Because you actually saw an increase of production and went from 0 to 1 million in one day.
Not in one day, in 5 years, but I just came back from a
That's what
fascinating
I meant.
visit to the country of Guyana, which is the newest producer in terms of meaningful oil amounts that they're bringing online. They had a discovery roughly 10 years ago, and they've managed to bring that production to on stream a lot quicker than we've seen in previous cases, from a country that has never had any oil production and any infrastructure. And it's also very technically challenging because it's offshore, deep water. So Guyana right now produces just south of 1 million barrels a day from virtually zero 5 years ago, which is astounding. And
That is astounding.
it was
Absolutely. And are they capped at that 1 million barrels per day, or will that increase over time?
No, they're not capped, and obviously increasing oil production in such technically difficult environments as deep water offshore takes a little while. So there's a plan to continue to potentially add to that production and and see the country hopefully really turn into an oil powerhouse in the not too distant future.
And this is an ExxonMobil operation, I presume.
It is a consortium that is led by ExxonMobil. Yes.
That's outstanding. That's great. Maria, I know you're pressed for time. You are going to the Federal Reserve of Dallas this week to speak there. So I thank you so much for joining me on short notice today and really instruct the audience on what we should anticipate with the oil trade.
Todd, it was great talking to you. Good luck to everyone. These are not easy markets, so hopefully everybody would be on the right side of the strait.
You're right about that, and they are not easy. And that's why at 12 o'clock today, we have Miss Schneider from MarketGauge.com. She's an oil trading expert. She's going to tell you how to place your trades, what you should anticipate with the war taking place. Maria, thanks again for joining me. I can't wait to have you back. I know we'll have you back very soon to talk a little bit further about this and obviously LNG. Sounds good, Todd. Thank you so much. Absolutely. So on behalf of Maria Jelescu Dreyfus, I am Todd Schoenberger. Thank you once again for joining us today on BTT's special report about the war in Iran. We'll catch you next time. Take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
We're the economic modern family. Watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene from the streets to the screens to your trading machine. Tap in, stay tuned, feel the beat line, cause the market tells a story through the family line.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.